This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
This is the second lecture on basic variance analysis for paper F5. And if you remember, in the first lecture, we produced a flexed budget, and that certainly could be asked all by itself for getting variances. We worked out the total variances, but as said, I was talking about materials initially, that there are different reasons why we've overspent. And so the really important variance work is to analyse and find out why did we overspend by 3255. And so let's start going through each of the cost variances in turn and doing the standard analysis. First of all, the materials. I do know that the total variance we're looking at is 3255 adverse. And as I said, we're trying to find out why. And if you look at the cost card, the standard cost, we should have spent 18, but we should have used 4 kilos of material. We should have paid $4.50 per kilo. That's where the 18 came from. And so we're going to look at those two things separately. We're going to check, did we pay $4.50 or not? And if we paid different than $4.50, how much did that affect things? And completely separately, did we use 4 kilos of material unit? Did we use more? Did we use less? Now, I'm going to go to the rules. There are different ways you can set out the rules. It doesn't matter how you do your workings. So if you've learned the rules in a slightly different layout, that's fine. But there is clearly only one right answer for each of them. So I'll do it the way I always do it. But I will mention as we go through, there are various places where you can speed up. But let's first of all look at the 450. And we'll call this the expenditure variance. And so all I'm checking here is, did we pay $4.50 a kilo or didn't we? And so what we do, we take our actual purchases. And if you look at the actual results, we bought 35,464 kilos. And so whether that's right or wrong, I don't care. That's how many kilos we bought. And we'll compare what we actually paid for them, which again from the bottom table is 163,455. To check whether we paid the right price, we'll compare that with what we should have paid for them, the actual purchases at standard cost. And so, all right, we did buy 35,464 kilos. How much should we have paid per kilo? It should have been $4.50. And therefore, in total, we should have paid $159,588. And so we obviously paid more than we were expecting. How much extra? The difference, 3,867. There's the variance, and because we paid more than we should have done, it's adverse. It would end up reducing the profit. So that's dealt with that. But of course, even if we had paid the right price of $4.50, the other thing we need to look at is, did we use the right quantity? Did we use 4 kilos a unit? And so we call that the materials usage variance. And for usage, let's look first of all at the kilos. We compare what we actually used, 35,464, Well, to check whether we use too much or too little, compare what we should have used, the standard usage, for the actual production. So how many did we produce? We produced 8,900 units. We should have used 4 kilos a unit. And so in total, we should have used 35,600 kilos. So here we actually did well. We managed to produce those units using a few less kilos than we thought we would. The difference in kilos, 3, is that right? 35,600 minus 35,464. Yeah, we used 136 kilos less. How much on its own would that have saved us? Well, at the standard cost per kilo of 450, that on its own would have saved us 612. And because that on its own would have saved us money, more profit, that is favourable. And now we've done the analysis because, as I said before, there's like to be 2 different managers responsible. One responsible for buying the material, another responsible for how we use it. And of course, we can check here the 2 together. 3867 adverse, 612 favourable is a net 3255 adverse, which was what we were trying to analyse. Having said that, normally you won't be in a position to check, particularly in multiple choice questions, because they're unlikely to ask you the full flexing and calculations of variances. And so you wouldn't know, if you were doing variances, you wouldn't normally have calculated 3255, and you don't have to waste time. You've got to be confident and be able to go straight into the expenditure and usage variance. That's materials. And always at F2 and F5, it is always the same costs we need to be concerned with: materials, labour, variable, fixed. So let's move on now and do the same sort of thing on labour. And remember, with labour, if you look at the cost card, it should be 25 a unit. It should be 5 hours at $5 per hour. And so in exactly the same way as with materials, we will look at the 2 separately. Did we pay $5 an hour or not? And did we take 5 hours a unit or not? 2 separate variances. Here, for reasons you'll see in a second, there is going to be an extra variance as well. But let's make a start. First of all, let's check the $5. So just like the expenditure variance of materials, although we changed the name, it's rate of pay variance. To check whether we actually paid $5 an hour or not, we take the actual hours we paid for. And if you look at the question, it says labour, 45,400 hours paid. It then says 44,100 worked. We'll worry about that in a moment. But for rightly or wrongly, we paid for 45,400 hours. And what was the actual cost? 224,515. Well, how much should it have cost if we'd paid at the right rate? Actual hours paid at standard cost. Again, 45,400. It should have been $5 an hour, and therefore we should have paid 227,000. And so in fact, here's quite good. We obviously managed to pay a lower rate per hour. What's the difference? 227,000 minus 224,515. 2485. We're saving money, we've paid less, and so on its own, that's favourable. F. All right, so now let's forget that. We've dealt with the rate business, but even if we had paid the right rate of $5 an hour, what else has happened? Well, look again at the actual results. We did pay for 45,400 hours, but they only worked 44,100. So for some reason, we were paying them for hours when they did no work. Now, I don't know why, and for the minute I'm not concerned why, but surely, if we've paid them for hours when they weren't doing anything, I think clearly we're losing money. Now, hours, when they're getting paid but not working, we call them idle hours. And so let's look at what that's cost us. We call it the idle time variance. So how many hours were we wasting, paying them, but they're not working for us, not doing work for us? If you look at the hours, the actual hours paid were 45,400. However, the actual hours worked were only 44,100. And so there were 1,300 hours when they were doing nothing. And as I say, we call that idle time. And how much does it cost us to pay them for hours when they're not actually working? Well, remember, we've already dealt with the rate of pay business, so at standard cost, that on its own would have cost us the standard rate of $5 an hour, a total of $6,500. It's adverse, I hope, very obviously. Incidentally, when we come to the further variances for paper F5, you'll see that actually that we may do a bit differently, but I'm not worried about it here. That sorted that out, but we still need to look at the hours worked, because on the cost card, we said they should be working 5 hours a unit. We need to check, were they taking longer or were they quicker? Because again, that will cost us money or save us money. And to check whether they're taking the right length of time, we call this the efficiency variance. And it's exactly the same sort of logic as the materials usage variance. Here we'll work in hours, and we'll compare the actual hours they worked $44,100. Compare it with the hours they should have worked, the standard hours for the actual production. How many did we produce? 8,900. How many hours should they have spent on each unit? 5 hours. And so in total, we were expecting them to work 44,500 hours. And in fact, it's been quite good. They actually produced those units in fewer hours. They saved 400 hours. And on its own, how much money would that have saved us? Well, at the standard cost of $5 per hour, that would have saved us 2,000. It would have saved us money, more profit, it's favourable. And so again, we've analysed. As I said, I'll stop doing this because in the exam, if you're asked any of these, there'll be extracts. You won't be able to check them, or you'd be wasting time if you did. But you see 2,000 favourable. We lost 6,500 on idle time. We saved 2,485 on rate of pay. And so what's the net total? 6,500 adverse minus 2,000 favourable minus 2,485. Yeah, the total 2,015 adverse, which, yeah, we knew that was the total variance anyway. Here, all we've done is analyse it and found out why we overspent. And as you can see, it was really only due to the idle time. Otherwise, we did quite well. We paid them a lower rate. They worked faster. The big question is, why on earth were we paying them for all that idle time? Anyway, let's carry on and do one more in this lecture. The next one is variable overheads. And again, if you look at the cost card, it should have been $10 a unit. It should have been 5 hours of overheads at $2 per hour. Now, the 5 hours isn't a coincidence. A minute ago, and on the cost card, you can see labour, we're expecting 5 hours a unit. And here, we're assuming that variable overheads are based on labour hours. And so every unit should take 5 hours of labour, but every unit should also take 5 hours of overheads. So it's the labour hours, but whereas labour itself, you're paying the hours at $5 an hour, variable overheads are incurred at $2 an hour. So again, I would say, did we pay $2 an hour? Did they actually work 5 hours? First of all, the $2, same as rate of pay variance, but we call it the expenditure variance. But one rather important thing here, with labour, we pay them for hours, whether they're working or not. As far as overheads are concerned, though, we do assume that we only have overheads during hours they're actually working. You know, we had all those idle hours, and fine, during those idle hours, we were still paying them the wages. But at least during idle hours, when they're not working, we say there are no overheads. So for the expenditure variance, we take the actual hours worked, which were 44,100, because it's those working hours where we're actually incurring overheads. And then we do the normal business. We compare the actual cost for overheads 87,348 with what we should have paid, actual hours worked. At standard cost. And so how much should we have paid? 44,100 hours. We should have paid at the rate of $2 an hour, which is 88,200. And so we have actually saved money here. 88,200, 87,348. The variance, 852 favourable, we saved money. But that sorts that out. But even if we had been paying the right rate per hour, the other thing we need to check is, did they work the right number of hours and therefore use the right number of overheads? It's the efficiency variance. So in hours, we compare the actual hours they worked, 44,100, with the hours they should have worked, the standard hours for the actual production. We produced 8,900. Each unit should have taken 5 hours of labour and therefore of overheads. 44,500. And so they were fast at 400 hours. And do note that the efficiency variance in hours is exactly the same as for labour. If you look back, whether it's labour or variable overheads, we're looking to see, did they take more hours or fewer hours? It's the same workings. We saved 400. It's just when we come to cost it, with labour, we cost it at standard rate per hour of $5. For overheads, the standard cost is $2 an hour. And so here it saved us 800. I said I'd stop winding back, and I will. But those two together total 1652 favourable. If you do look back, that was the total variance that we set out to analyse. Okay, so we've dealt with materials, labour, variable. I'm going to stop this lecture here, because in the next lecture we'll finish it off and I'll do the fixed overheads. But the reason I want to break here is because fixed overheads are rather different because of that problem we had earlier, that with absorption costing we have flexed fixed overheads, whereas in real life fixed overheads should stay fixed. So it is a bit different, whereas the three we've just done, the materials, labour, variable, although each has its own rules, you've got to learn the rules, they are very similar. The logic is the same in each case, and so I hope it makes sense. So I say we'll stop here. Next one, we'll see if we can sort out this business over the fixed overheads.